What is up, guys? Kevin Cage here with another XRP update. Let's dive into some Ripple and XRP information. First things first, guys, shared by Roth in today's Kuwait Times. Ripple, the company, and their training is mentioned as part of KFH's Forza program. KFH is the Kuwait Financial House, aligning with their desire to reinforce their leadership in digitization. Link available right here. We can click, see it for yourselves, mentioning it right here alongside other tech firms such as Microsoft, Google, Apple, and Ripple. Obviously, we are well aware Microsoft runs a validator on the XRP ledger. Google Ventures is in fact an early investor of Ripple back in the day. So just wanted to point this out. I know that KFH and a variety of other Kuwait-based banks have shown Ripple and RippleNet on their website. Just wanted to show that adoption is coming. Notice, to clarify, KFH's Forza program aligns with their desire to digitalize, and somehow Ripple has been involved either through trainings, visits, along with Microsoft, Google, and Apple. No surprise, they are one of the educators and stewards of this space. Also, shared by Jack the Rippler. Boom. Central banking, and this is on May 18th, 2021. XRP will be used as a bridge currency for CBDCs. Of course, that is healthy speculation in my opinion based off of all the XRP privacy features that are available. Of course, guys, yes, I understand, crawl, walk, run. However, this is pretty compelling. This is, notice the source right here is a BIS document, and this source is actually on centralbanking.com, and you can see use of crypto assets as a bridge currency, and Ripple liquidity is named right there. Along with this DLT CLS net, I'm going to have to dive in and see what this is specifically, because if it is related to continuous link settlement, which obviously it is based off the name, very, very interesting things ahead. And of course, Jack the Rippler goes on, even quoting Monica Long of RippleX, tokenization has always been a key feature of the XRP ledger with over 5,400 plus issued tokens since inception. Central bank digital currencies will live on a new private ledger, or will live on new private ledgers that run parallel to the XRP ledger, using XRP as a bridge to interoperate with other currencies. No more walled gardens. And for the 589th time, guys, there is no private XRP, there is no it's just XRP, period. They've said this time and time again. Ask Matt Hamilton of RippleX themselves, okay? Next, Leo Brainerd, and I know we know who she is, and I always butcher her name. They're speaking at Consensus alongside with Ray Dalio. This is, CoinDesk Digital Currency Group's event discussing blockchain. So in my opinion, crypto is here to stay. Is it volatile? Does it fluctuate like crazy in price? Yes, any nascent asset class does. Now, shared by Matthew Liny. The Fed is pushing for a digital dollar, of course. We do know that there's many platforms that enable XRP, no surprise. Discussing swaps, so let's look at this really quick. We can see, published on May 24th, 2021, the Fed's Leo Brainerd pushes digital dollar as a central bank digital currency race heats up. Very interesting. Of course, there are a few types of digital dollar projects, so to speak. You could be discussing the one that Christopher Giancarlo, who is an advisor to Ripple, discusses. You could be talking about USDC, US dollar coin of Circle, a massive firm, and also heavily backed by, Coinbase and DCG. And you name it. So, yep, I think it is pretty interesting, guys. I do see that a CBDC will be a thing, but of course, every time they say it, it gets pushed back another year. So who cares? This is the domestic use case, guys. Cross-border payments needs remediation now, and that is XRP. So first off, Leo Brainerd, right here, member of the Federal Reserve Board of Governors, and she's speaking at Consensus, as well as Ray Dalio, I'm sure you guys know him as well, American billionaire investor and hedge fund manager. Next, we have shared by Roth. This is pretty interesting, and of course, the headlines will say that, China's all out banning crypto, just like India has 1 million times. We can see news that China has banned financial payment institutions, these FIs, from crypto means. So this means people doing business in China will need to use China's currency, not cryptocurrency. It also might mean a fast ODL on-demand liquidity will be even more valuable to cross-border businesses, and this is what I absolutely agree with, and this is something that Ripple, potentially going to be the Amazon of payments, had the foresight to understand years before. My greatest fear is not that I'm wrong, it's simply that I'm too early, and right now is the sweet spot, getting clarity for good reason, guys, so I am beyond excited for what's yet to come. Also, guys, Roth just kind of giving a little bit more speculation here, but investors there, they're free to buy and hold crypto, specifically in China, guys. But notice that China has banned financial payment institutions from crypto means. So very interesting. We're going to see what kind of impact this has. Of course, there's all this FUD with the mining farms. And of course, they're just going to go other places, whether it's Malta, friendly other jurisdictions, and, Singapore, Japan, throughout Europe, or even just Texas in the United States. So it doesn't really matter. Business and people are going to go to where they are treated best. So I don't really care about that fund personally. I do not think that it's going to have a negative effect on the entire cryptocurrency space in the long term. I think it's going to essentially just push a certain type of movement with the mining pools, but I actually think that this will just promote the green energy-based cryptos that are going to be focusing on carbon emissions, such as XRP, Algorand, any other crypto besides really proof-of-work mechanisms for that matter. So if I didn't name your crypto, don't be upset. I guarantee it is a little bit more efficient than Bitcoin, okay? So talking about that, it seems though that these gateways there could still provide some needed liquidity. Boom. The genius of on-demand liquidity, which leverages XRP, guys. And keep in mind, hundreds of clients of RippleNet in over 70 countries right now available. We're going to talk about the impact, besides just kind of the Kuwait Financial House in Egypt, but globally, okay? And of course, in the next video, I'll talk more about Brazil and what it could mean for the entire XRP price in the future, guys, with this type of volume running through the ledger on a daily basis. So the genius of ODL is that it does not require banks or businesses to hold XRP. The endpoints just get the cash while the ledger pulls the liquidity from the relevant places. These banks, these institutions, they don't care what happens in between. It's just like you and I. All we care is that it works well, and it's reliable. And that is exactly how the future of finance is going to function. All right. Next, also just other news, just talking about things that are kind of a couple years ago and then applying it to now, and we're going to keep an eye on this. Remember Finabler? I know we know Finastra, huge partner of Ripple. We also have Finabler. This is the UAE exchange, and Ripple to begin blockchain payments by first quarter. This was in 2018 when Ripple only had like 100 clients. So early days. So the UAE-based UAE exchange and Ripple plan to launch cross-border payments remittances to Asia via blockchain, cough, the XRP ledger, by the first quarter of 2019. Very interesting. And of course, the CEO even mentioned Asia is one of the biggest recipients of the roughly $613 billion in remittances sent globally last year. That's in 2018. Do you think that this pandemic had any type of acceleration or impact? Absolutely. We've gone over the stats recently. So very powerful stuff. Let's see, Middle East, foreign exchange, Finabler. Yep, and Finabler is one of the main players. A few other things, guys, just talking about their future plans and leveraging blockchain to go into Asia as well. It reminds me a lot of things that we know about deLocale, not only throughout Latin America, but throughout Asia. Look at this, when they included only 100 banks and financial institutions. So that's funny. And now XRP's done over $2.4 billion in notional value, if not more, since that was just a few months ago. And we also get the projections from people from Ripple and other people in the industry talking about the total cryptocurrency market cap and the growth in the trend. Last year, 100 or 200 billion? And we're still over $1 trillion. So year-over-year growth, it is growing, just like RippleNet has 10x'd. So also, Middle East lenders, National Bank, or this is Rock Bank, we've talked about them. We have the Kuwait Financial House, which essentially talks about Ripple all the time. And then this is when they joined Ripple, alongside some global banks like Standard Chartered. I don't know why they mentioned Standard Chartered, since they're an early investor in Ripple anyways. But nonetheless, we're going to be watching all these things. And notice UAE Exchange aims to increase its shares in the global remittance industry to more than 10% by 2020. Now, my point about this, and just kind of using basic deductive reasoning, is all of these little FIs, some of them big, some of them small, they're trying to compete. If they can save somebody instead of a 10% or 7% fee across borders, and they can provide 5%, the customers are going to go to them. So this is competition. What Ripple is doing is allowing everyday mom and pop shops, not just the big banks, to win. The big banks do not like that because they make all of their money, or at least billions, if not trillions of dollars, from transaction banking. So if the average UAE fee is 7% or 8% or something crazy, even higher in some illiquid corridors in some cases, Ripple's targeting those corridors, lowering those fees from a number of basis points, and then offering and essentially allowing these players to compete with the big banks, HSBC, JP Morgan, Citi. And eventually, it does take time. It's going to level the playing field and chip away from the tyrants. So it's very interesting, guys. And now this is just one little thing that Ripple's doing for XRP in terms of cross-border payments. Don't get me started on Flare. Don't get me started on Coil. Don't get me started on Forte and RippleX and all these SDKs that are being built. It's just a very interesting time to be alive. And some people, they're looking at price and they're just focused on this. but I am focused on the future, okay? So anyways, let's keep moving here. Next, we have Nebraska bill to allow banks to offer crypto services passes to final round. Now, this was just a few days ago, so fingers are crossed. I'm not going to bore you with the details. Of course, we get, different states doing this every other week, but I did want to share that. Also, I thought this was funny. This is XRP Crypto Wolf, $100 billion worth of stablecoins on the sidelines to buy the dip. And he actually had this, and this is just available on the blockcrypto.com. So this is the total stablecoin supply. You got all your stablecoins, Tether, USDC, BUSD, DAI, etc. And now we have a 1 month look. Kind of looks flat. And what does everybody say? And what do we say too? When in doubt, zoom out. Let's go to the 3 month. A little uptrend. All right, let's do year to date. And let's do all. People thought, right there, April 2020, guys, or March 2020, when we were crashing, we thought that was the end of crypto. XRP was at 11 cents. We thought it was over. When in doubt, zoom out. People that held from, March, April, or people that held even from December after that nasty crash of XRP going to 17 cents. We're still here. So, perspective, it's a hell of a thing, isn't it? And of course, you guys do what's best for you. Set low limit orders, don't go all into anything. But for me, dollar cost averaging has done wonders for my portfolio. Because at the end of the day, could you sell and try to buy lower? Yes, but I'm also not willing to lose my entire position that I've been building for several years, just like you guys. So it really does come down to risk tolerance, and most importantly, as an investor, self-awareness. What I do may not be right for you, and you have to decide that for yourselves. So great growth. And of course, we're watching the TVL, the total value locked in the world of DeFi. All these trends are screaming up. Now, I'm not saying it's going to keep going up and up and up without any pullbacks or even major corrections like we just witnessed. But what I'm saying is year over year, I'm comfortably going to be in this crypto game at least for the next 5 years, at least. And you know what? With the rest of the profits, maybe I'll get back and go heavy into real estate, conserve my wealth in some precious metals, maybe just silver primarily, maybe some gold. Go into some reliable, very conservative index funds in the stock market. It doesn't matter. But right now, the earning potential for me is in the cryptocurrency space as an investor. And last but not least, guys, just 2 tweets to give you some perspective. So shared by Rob Art. If most were bullish at $64,000 per Bitcoin, and now it dumped, and now everyone is bearish when it was at 30K, what happens next? Love it. Love that perspective. And also, Flare community, I know we've said this on the channel a few times too, and I like how he uses this wording specifically. Fundamentals right now, even though, price comes back, XRP's at $2, blah, blah, blah. We're at 57 cents on April 1st. Fundamentals for all crypto assets, any of your favorite assets, provided they have fundamentals, they're still intact. Nothing has changed. Do not let the current price influence the knowledge you have acquired. And so that's why I focus. And it might be silly to some, but that's why I focus on the fundamentals. That's why I'm looking at the news. That's why I'm looking at the year-over-year growth and looking at adoption and reading as much as possible, because that helps me when I'm scared about seeing wicks go very, very low. And then also look at history. Look at all of these 60%, 80%, 90% pullbacks. What do they later lead to? Massive, massive gains. Max pain for the massive gains. Now, you do what's best for you. I'm not telling you to hodl whatever you want, but at the end of the day, guys, I'm just going to continue dollar cost averaging into my positions. I keep long-term holdings. I hold way too many assets, frankly, so it's kind of a waste of time. I should actually narrow it down. I have short-term trading bag where I try to time the fluctuation of the market, and it's usually large swing trades when the opportunity presents itself. And then also I always have side cash, whether that side cash, the fiat US dollar just burning a hole in my pocket, is 25% of my portfolio. It's nice to have, and it helps me sleep at night personally, to capitalize when markets do something crazy like a 40% pullback, if not more. Because if you use that side cash and you had a limit order on an exchange or decide however you want to implement it, you can snag that 40% discount. Typically, it's going to bounce at least 20%. It bounces 20%. Then you can take profit and get an easy 20% in a matter of a few days. Powerful, powerful stuff. So just food for thought, guys, and that is not financial advice. That's just one man's opinion. Now, do not let the current price distract you. The knowledge you've acquired, nothing's changed. The price of an asset and the value of an asset are 2 completely different things. When there is a large discrepancy between the 2, there is opportunity. And that is exactly what a lot of people say. I know Mark Moss says this, that essentially markets are always trying to find equilibrium between perception and reality. And we can capitalize on what happens in between. So anyways, I greatly appreciate everyone that likes and subscribes to keep this channel going, and I'll catch you in the next one.